Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's Tuesday. Let's see what's going on. And also a shout out to Janos. Janos had a little bimp in the automobile, in his machine, and he is on the sick side of things at the moment, a little injured. So he hit his head. So let's hope that everything's moving fine for him. All right, let's take a look at it this morning. Let's see what we got. There's the Swiss. You can see it right there, just trying to lift up a little bit. Just a little bit right there. And you can see it over in Chicago Quant. Same situation. It is picking up and lifting up. So that means that the dollar is actually becoming stronger. I'm not sure what particular thing. I have a couple of things I could blame it on. You know, I try not to blame it on anything, but the end result is that there's always a story. There's always a story to all these products, and then the end result is that supposedly in China last night, they were falling apart even more from Evergrande, and it was bleeding into the other real estate assets, I guess you could say, other stocks, other companies, and so with that, that probably put more pressure on the on other currencies, and you know, money running for safe haven, that type of thing. That's usually the way it runs. And as we always say here, it's always odd that even if we're the problem or we're the story, they run towards our currency and our bonds, and when we know we are the issue, which is kind of strange in its own right. So there you go. You can see the Swiss is moving up, which means the dollar is moving up. All right, and what else can we say about that? I guess not much. You can see on J4X here, you know, it has bounced off that bottom. You know, we see that a lot of times. We see it bouncing off of bottoms relative to other bottoms, and they start to move up, and you get the strength in there. And when it comes to Chicago Quant, you can see we've been in a weekly buy since the is that the 91-ish and a half area, 91.40.35 area, something like that. And now we are we've gotten as high as the 93.68 area right there, and now we're making another push towards the upside and challenging that channel that the Swiss has been kind of cruising along in for like the last year. And you can see it's used the triangle that we were following for a short period of time, you know, going back into June. It turned that into a support and started to hold up above that. And now it's, like I said, it's oscillating that channel. This channel here we've been watching for almost a whole year now, maybe a little bit longer than a year. And so we'll you know, see how long that lasts. We do believe these currencies, lots of these pairs, live inside their channels, and so that's kind of like a nice thing, you know, that we have a general idea of where they want to be, because the Federal Reserve and the U.S. and the of the U.S. and the central banks across the planet try to hold these things in ranges so that they're stable. I think that's, you know, if you had to use a word, I know I could use dozens of others, but if you really had to use a word, what the objective has been with QE since 2008, I would have to say stability. That is truly what they are looking for, is stability. As we take a sip of our hot tea. And so, you know, I don't look at them as manipulating as much as like the U.S. Treasury likes to refer to it as manipulating, but I like to look at it more as they're trying to keep all these pairs trades. Now, obviously, when I say that out loud, it really doesn't help the Turkish Lira, who has found a way to go from, like, you know, 1.5 to, like, you know, 9. You know, that is not stable. Definitely not stable. That's definitely not stable. But I'm sure that they would wish that it was stable. Maybe sometimes it's the carrot and the stick, you know, some type of punishment for not being part of the process. I don't know. You know, I mean, we could speculate what that story is over and over again. But in the end result, we know it's going from 1.5 to 10. So obviously, it's not being as stable as these other pairs trades that we watch. All right. From here, we drift over to the euro. See how the euro looks this morning right there. You can see it's still in its sell. That's that weakness, just like we're seeing in the Swiss franc. And we'll go over to J4X and slide that in right there. It's down right there. Pressure's on. And we'll see how the slow stoke versus the fast stoke tried to lift and failed and is rolling over. And we've got a sea of red on this whole ride down. Look at that. Just the hinkies have just been like, you know, just constantly just saying no, no, no. And as you can see over in Chicago Quant, we have vacillated. You know, I mean, we went into a sell in here, then we went back into a buy for that bounce there, then we went back into a sell here, and now we've been in a sell since this area up in here. And remember, that's a Bollinger Band there. Someone asked about a Bollinger Band, and we throw it in there just for you to be able to see it, how our manifold works compared to the Bollinger Band. We're using a one standard deviation of our formula, and so that's why that's there. So let's highlight that a little bit better. Make it a little bit stronger. Let's make it a little bit thickerish. Get rid of those. Make that thickerish. And there's an actual midline too. We could make that even more exciting. Put that in there like that. There we are. And so that shows you how the Bollinger Band functions on a normal day-to-day basis. And then you can see how our math, you know, where it started the curve here, it was breaking down, whereas Bollinger was trying to lift. And then you can see how, you know, putting this one standard, you know, Bollinger Bands are just one standard deviation of the close, or a high or a low, or something like that. You know, choosing what you choose to measure it by. And in this case here, we use a one standard deviation of a 3 average of our formula. So you can see that the if we shrink this down, like so, you can see the flavor of it. See where it makes its little bottom there, and moves up just like Bollinger, and then Bollinger keeps on riding up to here, whereas our work recognizes it really quick and breaks down for you there, and so forth. And so all this is a one standard deviation of our formula, and Bollinger is one standard deviation of the last close or the high or the average of it, like a Hinky Ashke, you know, that type of thing. All right, so there's the euro moving down, and you see it here, same situation, lots of issues. And then from there we jump over to the British pound, the great British pound, right there. That's showing strength, and we have a green line in there, I think, at this point too, from being higher than yesterday. So we're already into the buy. It rolled over again, didn't it? How about that? No, it's still up. I'm not sure why that's down, but that's the way it goes, because we sent our charts out looking a lot different than this. And let's widen that too. There we go. So they're pressing it down out of nowhere. How about that? We were, I think we're using, what are we using? Gas line 3 here. And I'm a little confused why our chart that goes out looks a little different there. But it's rolling over here at this moment in time. That's the way it goes, and it's joining in with the weekly. So that pressure, that lack of growth, or, you know, lack of appreciation, not growth, appreciation. I did see seeing all kinds of wild stories for this winter. Yeah, I mean, it sounds like it's going to be one of the coldest winters we've seen in a long while. You know, they keep on prepping for that, so forth and so on. I talk about it all the time. I've been part of the camp that believes we're going into an ice age since the 1970s. We've been talking about that in science. How we get into this global warming thing, I have no idea. It seems to be some type of political religion of some form. but all the math shows is that we are going into an ice age. So I'm not sure why. And you know, it's really funny. The global warmers, they take the NASA charts and they color out the heat. Or is it the cold? No, the cold, that's it. They color out the cold and try to emphasize how hot things are when in fact we're at a 10-year low in heat. So, and the heat that does come, which is, here's the fascinating part. The heat increase we do see comes at night, not during the day. So that's even weirder in the sense that not only are our days cooler, but our nights are warmer. And we are heading towards that, you know, we're on a 10-year average of a downstroke in temperatures, and we're like a 100-year downstroke in temperatures. But somehow or another, these people keep on trying to remove fossil fuels from our everyday existence. And you can see Europe and England in particular is paying for it because they've had a horrible year. The winds died down, their windmills didn't windmill. You know, they've had to fire up the coal-fired furnaces to generate electricity, and they've increased all kinds of carbon into the atmosphere, and we're still cooling. So it's really strange. Doc here is always confused by these religious zealots of global warming. It's like Chicken Little, like when we were kids, the story of Chicken Little. The sky is falling, but in the end they find out it's just rain. All right, anyway, that's where we are, and I understand, matter of fact, they're trying to pass a law today in England, or trying to put legislation up that you're not allowed to charge your car during peak electric hours. That's right. So in other words, you know, you pull into your home at 1 in the afternoon and you're on low, you can't charge it again until like 1 in the morning. So this thing of fossil fuels is a very strange religion, very strange. All right, from there we go over to what excited me last night. There was a headline that Turkey was doing something with the military somewhere in Syria, and the headline was Turkish Lira crashes. And I ran to the Turkish Lira, lit it up to take a look and see, and it didn't really go anywhere. I mean, it's up, it's at all-time highs against the dollar there, but that's not exactly a crash. I mean, I'll show you what a crash looks like in the Turkish Lira, and it don't look like that, Lucy. Oh no, see, there's a crash. Now that's a crash. The hyperbole we see in media sometimes is really way out there. It's very strange. So we could say the non-crash crash of the Turkish Lira today. That's really where it's at. And then let's check her out over here on J4X. Bingo. There it is. You can see just up a little bit. It's not through the roof. It's not like it went from 1.5 to 9, and now it's going from 9 to like 12. It went from 9 to 9.10. I mean, honestly, the hyperbole sometimes from media is just it's just absurd, totally absurd. All right, so there we go. You can see here, you know, the fast-moving stochastic moving up nice. You can see they've been making higher lows. Obviously, issues are abounding when it comes to the Turkish Lira, but not on any real panic mode type of thing, not like we've seen before. So that's where we are there. Now, let's go with that, as I like to say, location. Let's take a look at the euro against the Turkish Lira. Right there. And look at it. That's barely up. I mean, yes, you can see that. They did spike it. There's no doubt about it. We go back and do that again. You're going to see it. Let's do that again. That's kind of fun. Let's do that again. See that big spike there. Let's do that one more time. Here you go. You'll be able to see it. Look at how high. It did get up to 10 and change. So it obviously did explode up to the 10s. Looks like about 10:30 or something like that. let's see if our, it's funny is the U.S. I don't know if it picked it up. Let's see what it did here. Let's go to Euro Turkish Lira on Chicago Quad. Right there. Let's see if it really represents that. See, it doesn't even represent that there. The best they're saying, they're saying 1040, 1045.95. Okay, yeah. All right, so they did make a mad dash from, let's see, what is it? From, I guess, we were in the 1039 area and ran to the 1050 area. I mean, it's not, again, it's not any major damage. Let's put it this way. People in Turkey should be very happy if they consider that a crash, because that's not like it going from 1.5 to 2.5 or 8.5 to 10. I mean, that's not a 1,500 points. It was like 10 points, 20 points, and that's the gist of it all, really, when you look at the Turkish lira. And you see here strength, and when we go back, they didn't take that out. So what are they getting excited about? I mean, that's 1075 or something like that. They got up to like 1040 something. It's like not a crash, media. It was not a crash. All right. Let's see, where are we at from here? And from here, what we do is we drift over to the Canadian. See how the Canadian's doing this morning. Right there. And there's the Canadian. It has been finding a way to go down, moving against, definitely acting strong against the dollar. That's for sure. Maybe that says something about the election coming up. They have an election coming up very soon. We've seen some of the stranger headlines on that one, but maybe they're going to move away from the socialism. I don't know. We'll see. I mean, you got to figure it. If they're buying that currency, they've got to be moving away from the socialism. I mean, when Trudeau took office, it was like in the 80s or 90s, right, against the dollar. And with Trudeau in there, I mean, it's gone up into like the 150s. So obviously, matter of fact, the last time he was up for election, they were running it back down, and they were trying to knock it down before the election because it looked like he was not going to win. And then what happened was he didn't win with the coalition that he had before. He had to bring in the more socialists to put a coalition together because his party didn't get enough votes. Because the polls were right, and what he did is he negotiated to link himself with the socialist itself. So that's been a very socialist government up there at this point. So maybe the Canadian in price, the way it's moving down, and you can see we went to the weekly sell here, maybe the polls, which are not really reflecting a lot of information, maybe saying that Trudeau and his socialists are going to go out the door finally. And that would make sense because, like I said, before he got into office, this was like pre-Aragon in Turkey. It was it was 1.5. It was 1.25. For Turkey. Now it's with Aragon and his political or his economic policies, it's in the 8.5s. It's in the 9s. So I mean that's a devastating move. That's a multi-vicious crash. And when your currency goes from 1.5 to 9, ow. So one moment you're buying $1 for 1.5 Turkish lira, the next moment you're paying 9 Turkish lira for $1. Ouch. But we saw this with the Canadian. It seems to be acting stronger than we would expect. Now, no doubt we've seen gold steady and firm. And we've seen oil move to a couple year highs now. Today I think it got up to the 82 area. So we are seeing good reasons for the Canadian to go down. These are things that make the Canadian go down. So the last thing to see will be is the election. If Mr. Trudeau and his group totally lose power finally, then that will probably justify it, and we will see a, when we go over to J4X, let's just go over to J4X and take a look at the Canadian. See, there was a point where that was the last election. They thought he was gone, and then he had to link up. And then let's see if we can get a weekly in there. monthly, pre-Trudeau. Yeah, see, that was pre-Trudeau back in here. Then Trudeau wins, smack-a-doodle. And then this one, I think, right, one of these big dips was another election of Trudeau. So, I mean, we could see if his group is removed from power, you know, we could see, you know, a break the century mark, you know, the parity mark, 1.0 to 1.0 dollar to euro. We could see that. I would expect to see that. That wouldn't surprise me at all. So, all right. From there, what we do is when we look at Canadian, we're going to take a quick look at gold and oil, just to, you know, put that analogy together. And then what we do is we drift from there back over to the currencies, to the South African rand. So let's just do that. Let's do that thing we do. Let's fix those two at the same time. Okay. And we'll go over to crude oil to start off with. Or let's do crude oil first. Right there. There's, you can see it's moving down a little bit. It's like $1. And it's widened out a little bit there. You see, it's the line, the white line is breaking down against the hinky, against the slow-moving stochastic. Fast is breaking down. And then let's take a look at it over here on Chicago Quant. What am I looking for? Oh, I know where we got to go, right there. And then let's find it. There is the crude oil right there. And same situation, we are flirting with the daily sell, just like over on the hinky. Let's show you again. Not the hinky, but the J4X itself. And, you know, we've been in that buy for a bunch of weeks since the 60s. We got up into the 80s, so that's pretty cool. The weekly, you know, the weekly trend kicked in very well. So that's always nice to see that, you know, the confirmation, affirmation, the proof, I guess you could say, of our math, how it works on a more long-term basis. At the same time, it's very nimble. It can shift gears one week after another. If that's the way money is going, it's reading it and telling us what they're thinking. Excuse me, as I sip my tea. That's always a good thing, you know, traders. Definitely a good thing that to have a tool that gives us a good insight on what longer-term money is thinking about. All right, now we'll take a look at gold. Gold, right there, and it made a higher high and a lower low, and now we're basically flattish to unchanged. And you can see here it's breaking the time manifold right there. See that? And you can see we are still in a weekly sell right here for a couple weeks now. It's been in a weekly sell right around this price range, and it's gone higher high and lower low and higher high and lower low, and it just keeps on. Even with that crazy spike last Friday, in the end they could not hold it, and here we are. But it seems very tight. You can see that. So, you know, the metals complex is sideways at the moment. No real excitement there. Now, what's the other thing I could say about this? I guess we can say that gold and silver are kind of firm. But not on a weekly trend. They're only firm on daily trends, which is really odd. There was an article about paper gold and exchange gold and physical gold yesterday in Zero Hedge, but I really didn't get into it too much. I wasn't even in the mood for it. They were trying to measure different things. Maybe I'll go back and look at it. But in the end result is that we're not seeing. We're just not seeing the action in the metals complex that you would think we would see when you have inflation. Okay. Matter of fact, one of the traders sent me over an article from Bloomberg about this Dartmouth economics professor talking on Bloomberg this morning about he thinks we're in recession, and I said, yeah, okay, I hear that, but how do you categorize, since 2008, $120 billion a month being created out of thin air to buy, equities, bonds, and so forth, and corporates, and so how do you even measure a recession anymore? I mean, how do you do that? I'm not even sure how you measure a recession anymore. How do you remove? You have to remove the 120 billion a month being plowed into the U.S. market. Then I said, I think I would call it a super recession. And then I said, my response back was, what about, maybe I can get it up on the screen here. Let's do that. Let's see if we can get it up on the screen. I'll show you my response, because I thought it was pretty insightful, the situation altogether. I thought it was how do you measure these things? As traders, how do we try to measure these things? How do we know? That's the tough part out of it all, is we see lots of strange events going on, and in a mathematical way, we're not really seeing the true analysis. We're seeing excerpts. We're seeing different concepts overall. But I'm going to show you that. I see some of the bodies dropping off, but I don't care. I'm going to show you this because I think it's really important trying to understand marketplace. I really do. I see that as something really important. See, it's not there. I think it's here. Trash. So I'm going to find it in trash. See it there. Okay, so maybe that's in it. And that's the one I responded to. Let's see if I can find that. So I must have parked it somewhere. Let me go see where I parked it. Because I thought my response to the whole thing, and I'm going to show you that. Let's see. That's not it. I'm going to be really sad if I lost it. I think I've lost it. There? Not there either. Where did it go? It must be in the trash, because I sent it. So it must be sitting in the trash somewhere. Let's go into the trash so we can put it there. I moved it somewhere. Well, I guess I'm not going to be able to show you the response. I can show you the first part of it. It was this story right here. I'm going to just paste it up on here. And this was the question by one of the old exchange presidents. Right there. To make it white and big. And this was the question. And I thought it was a very fascinating question too when you're trying to figure out stuff. It says Danny Blanchflower, Dartmouth economics professor, quoted on Bloomberg, we're approaching, if not already, in a recession, but with no metrics. He didn't give us any metrics. And so my response basically was, which I can't find, was basically is how do you, after $120 billion being plowed in from the Federal Reserve and the 50 billion or 50% of all treasuries at every auction being bought by the Federal Reserve, how do you separate that? How do you separate those numbers, 120 billion a month plus rollovers of old bonds every month, every week? How do you separate that to be able to even declare a recession, have the conversation of a recession? Can there be a recession? In other words, we can have a slowdown. But remember, recessions are because there's less money coming into the system. Well, they're plowing money into the system at a breakneck speed. So, I have a hard time how an educator can get up on Bloomberg, since they like to hide the whole story. Matter of fact, I sent it over, and I didn't get any response back from the former chairman. Kind of curious, since he's was all hepped up on it. It kind of probably blew his mind about that one. The idea of how do you separate the 120 billion a month to be able to tell if you are in a recession or not, because you're not going to be in a recession with with $120 billion every month being created out of thin air. And remember, they're not even floating bonds for that. They just create it. They're not like going out and asking somebody to buy bonds and give them cash. They just create the cash themselves. They just print it themselves. So I don't know how you would be able to measure a recession. That's the thing that caught my eye. How could an educator get up on, from Dartmouth, get up there and talk about the idea that they might be in a recession, but not talk about the rationale of how a recession works? That's all. Just thought I'd throw that out there for the thinkers out there that like to play with ideas. So, all right. I wish I could find the response. My response I thought was so good. I probably parked it somewhere. It was probably such a good response I wanted to save it. But I obviously was not thinking clear enough to save it in the right spot, that's for sure. All right, anyhow, let's go over and take a look at the South African Rand. We do see the metals complex moving the way it is. And let's see what the South African Rand has to say about that. Right there. And basically, it's chopping. It's in a weekly buy. It goes into daily sells. Yesterday, it finally got into a daily buy right there. Put the little line in there. And today, you can see just the volatility signal going on with a red and a green, and still above the zero line. So there's no real direction here. It's just sideways. And I guess you could say the real direction, if there is a real direction, I should be saying that. There is a real direction, and obviously it is up. The weekly is telling us right there that it wants to go up, and it's going to lose more value against the dollar. It's pretty much the name of the game there. And let's put it over on J4X. See the flavor of it there. Yeah, see it's moving down there on the day to day, but it's the real power right now is the upside right there. Right. From there we go to Ruble, which is has been doing the opposite of that. Let's see what that's doing. See, today it's up a little bit on the Ruble, and we can see it over here on Chicago Quant. Oh yeah, look at that. We get a volatility signal, the red and the green together, and we've got this through the zero line. And just like on J4X, you can see we are flirting the same identical way with the white line through the dashed line, or the fast superseding the slow. And that is the action we're seeing there. Now we'll drift over to the Japanese yen. We check out the yen every morning in this little rotisserie of a trading thing, and it's been on that little rampage too on the upside with a weekly all the way back to here. It's been telling us over and over again that it wants to go up, and sure enough, it's going up. And you can see the daily joined in, and so it's been truly a winner chicken dinner. And then, last but not least, I guess some of the stranger things are going on in Mexico. Maybe, out of nowhere, they seem to have started doing something odd. Now, okay, there you go. Today, at least, it's bouncing down a little bit on the Mexican peso against the dollar. But that peso has been trading exquisitely well for, many months, a couple of years actually. And now we're seeing it just get a little bit more shaky. Let's see, where is it at? Right there. You can see we are playing with this oval, and we've been watching these different ovals that created themselves and then failed and stayed inside the channel. And this one is acting awful strong, and we talked about that because we were in a second week of the buy, and I was like, this thing is not going to give up, and it is not giving up. It's making higher highs, and it has stopped making lower lows. And we'll see. It looks like we're going to see some real action there up into the 21s now. We're at 83 now. A little surprising. I keep on expecting it to stop this stuff, but something is affecting the Mexican peso economically. It could be a lot of things. Mr. Biden's policies here in Mexico in particular, could be influencing it. It could be stuff like that. It really could. He could be threatening them, and we're not even hearing about it. Remember, the media will not report anything that Mr. Biden does that has a negative effect. So you have no idea sometimes what's going on and what they're saying until it actually happens. And then they act like, oh, we were surprised. Well, you can see there, it's trying to roll over, but not doing too good a job. And look at the way that the white line is just ripping. It's not even curved up there. Let me just show you that. On a week-to-week basis, that baby's still climbing. The trajectory has shifted on an angle, but it's still heading up, not down. It's taken out that high there. All right, and that is the last of the 4 currencies that we watch. Anybody have a question, you can fire them out. We will go back to the currencies. But what we're going to do now is we're going to drift over to the metals complex, and we'll take a look at the energy complex and get a better flavor of what's going on. Right there, there's the gold. Let's put it up on J4X at the same time. And there's gold. It was up. It's trying. We've got a volatility signal on our work right there at the moment. The green line is touching the top part of the time manifold. Nothing bearish, super bearish about that. It just is what it is. But we are in the overall weekly trend of a down. There's the weekly right there. It just refuses to take off. When it took off before it, they smashed it. Now let's take a look at silver. Right there. Throw that up on J4X. That's unchanged to down. You can see it's rolling over here a little bit. This morning it had to look like it was trying to roll over and failed. We were punching up. Okay, there you go. It's still minus. And you can see the weekly's 22 weeks in a sell. This is the 23rd week. We're heading for half a year now. This product's been in a weekly sell. And it started up in the 29s, and we've gone down as low as 21.5 area, or 21 3/4. What is that? 21.41 from 29 and change, almost 30. So, they've taken a third of this thing down in value almost. There is just not a lot of, conviction when it comes to the exchange traded silver. Whereas Robin was telling me yesterday that after I got done mentioning about the price analysis we do with physical versus exchange, he said that the coin dealers were another $1 higher. So they're asking another $1 higher. So they're like almost 33% off of the actual price at the exchange. That's a lot to be trading that high a premium of physical versus exchange traded paper silver. So it is a curious situation. We see it every day now, and obviously very few will talk about it. And it's not like we're gold bugs or anti-gold or whatever, or anti-silver. It's just that when we see an odd mathematical anomaly occurring, we will mention it because we want to know why it's doing it. Especially when we have the math that we have here, being able to, here you go. We've been in a weekly sell since May. Here we are heading for November. The thing has gone from the 28.5 area, it's high there, 28.58, closing that week in a weekly sell, all the way down to 21.40. So that's $7. It's a lot. It's a lot. It's an awful lot. And at the same time, right now they're quoting silver, physical silver, above $30. So what's wrong with this malfunction? Exactly. All right, from there, we go over and take a quick look at platinum. Right there, Jan contract, which was the tip-off of strength to come. It was like Christmas past, Christmas future, Christmas now. Like a carol story, You can see here, it has broken the triangle and is riding the top of it. So, that's platinum, and it moved up $100 from 900 to 1,000, and is bouncing between the 1,000. It's at $1,011 right now. Now 10 has just changed, but it got as high as almost 1,050. So there is a lot of interesting things are going, and we're trying to understand what they're trying to tell us, and then we use our math to confirm the possible story, because our math is so accurate. All right, where from here do we go? Let's go over to crude again, and there is crude oil, and it's moving down, and we're pushing into a sell, and we'll see what goes here. The green is not piercing the manifold, so there's not that much of a problem, probably just profit taking. And natural gas, which has been sliding down for 4 full days, going on a 5th, and the weekly is trying to get to just the time manifold. A lot of buying going on there. I really have a hard time believing they're going to sell any of this stuff too soon. Don't see it happening. Just don't see it happening. I know that there's wishful thinking, but I just don't see it happening. Especially when I see that there's anticipation of a warm, not a warm, I'm sorry, a cold winter. As much as the global kids want to tell us that there's global warming going on, when there isn't. All right, from there, what do we got going on? So that's okay. So that's the two we looked at. I think I have heating oil in here still. Let's see if I do. I'm almost sure I do. There it is. And there's November heating oil. And you can see here it's been riding high, same way. Like, it went from 218, 217, 215. What is that? That is 214 a gallon, all the way up to, in this weekly buy, it's gotten as high as 250 a gallon. That's a lot in less than a month. And here's, I guess that's even the higher high. Yes, today got up to 252.69. So we're looking at a 40-some-odd% appreciation in a matter of what's that? 1, 2, 3, 4, 5 weeks. A little more than a month. So there's a lot of pressure in the energy complex. All right. From there, let's see if we have that on JForex. Let's take a look at I know we have the crude oil. We looked at that right there. And it's trying to break down on a short-term basis, on a day-to-day, just like we are now. Let's see if they have heating oil. See, there's Brent, there's copper, there is gas, it's natural gas, that's the one we're looking at, and then let's just show you that, how it's breaking down just like our natural gas is on Chicago Quant, and you can see the Hinkies have been moving down for days just like Chicago Quant. And then, let's see, I thought they might have heating oil too. There, what is that? That is Hong Kong index. I could have sworn they had a heating oil. All right, so they don't. All right, so that's the look of both the energy complex and the metals complex. All right, now let's see, what do we do from here? Let's go over to the stock indices. See what's going on with stock indices. They had a heck of a rally last night. The Dow Jones Industrial Average was down 250 points at one point. Let's start off with the grand old lady. Let's check out the Dow Jones Industrial Average. So going into the London, Frankfurt, Swiss Opens, the Milan, the Madrid, Barcelona. Dow Jones Industrial Average was down here right before the opening of Europe, trading at 34,125. Look where she's trading right now, 34,428. So she is a full 300 points higher from the London Open, basically, today. That's where she's at. So they took it down 250 points, and now what is it up? It's up 55 points, as you can see right there. This is a 1 Tesla, what I like to call a 1 Tesla, or 369 ticks or contracts. And so you can see, we go into the buy here, it goes up. We go into the sell there, it goes down. This is for short-term traders, right there. And then we drift over to the J4X. Let's take a look at that on a day-to-day basis. It will jump out. It's around here somewhere. There it is. Right there. Is that it? Yep, that's it. So you can see here on a day-to-day basis, it is up. Having a fantastic rally today from London's Open. And you can see here, I'm not sure what that's all about, but I think our work is doing the same exact thing. Let's go back to that. And right there is the Dow Jones future. And again, just like in J4X, it is moving down. See that? Moving down, just like we are doing right. Let's put that up there again better. Okay, so it's scaled not right, but that's the scale. So we're breaking down, and you can see we are doing the same thing. We're a second day in a sell, but they bounced it. And we are flirting again with the weekly sell too. After, what was that? That was, you can see there, after 1, 2, 3, 4, 5 weeks in a sell, it went into a weekly buy last Friday, and now it's flirting again with the sell. So there's probably more pressure on this stock indice and all the stock indices. From there, we'll go to the S&P 500, and we'll take a look at that on a short-term basis to start off with. And obviously, that did the same thing, taking off from the London Open or the Swiss Open or the Frankfurt Open, take your choice of what you want to call it. And it was trading down at, there's the low, of 4,317, and we are looking at it right now. The high now is 4,065. So you're talking about a 50-point move. It's even more aggressive than what's going on in the Dow. You can see, went to the buy here, held in, I think it held, if not, it went to a sell for 1 bar, and it went back into a buy again for that ride, and so forth and so on. Another ride up. This one told us that it's going down. This one tried to tell us that it's trying to go up, but it didn't get going for a little bit, and finally it did. And it was a nice, smooth chicken dinner, winner chicken dinner. And then we topped out, which was interesting there. They drove it back down just 10 points, and now it's chasing after the highs of the day. So there is some interesting action we're seeing there. Now let's take a look at it on a daily basis. A daily basis. Right there. Same situation, curving. And the weekly is doing the same exact. Where's that mouse? Right there. The weekly is doing the same exact thing right there. Weakness. It's been 3 weeks in a sell now. This is the 3rd week. Tried lifting up. Trying, that is. And we'll see what they do with this. And that's the S&P 500. And you can see it here on Chicago, J4X there, breaking down the same exact way. Pinky is turned red, pressure is on, and the big bounce from last night, you got to wonder, did the ECB and the Fed jump in there and start perking it up? I mean, it has that look like they go and lend money overnight to funds and say, hey, how would you like some free money? They do that, Do you know they give Citadel, one of the most successful hedge funds, $1 billion overnight for free? So in other words, all you have to do is find something that yields something, and it's free money to you. that's how the central banks influence equities. What they do is when they're not buying them themselves, they lend money to private firms overnight for free, and as long as they keep on using the money the way they want them to, like in other words, buy stocks, they keep on lending them money for free. So in other words, if you can find a 2% yield, or 1% yield on $1 billion, you'll be able to pay a few salaries that way, I mean, think about it. What's 2% return on $1 billion? Well, obviously, it's more than 2 million, isn't it? It's more. Could be more like 20 million, couldn't it? Because there's 100. There's what? There's 100. Not 100 million. There's 100 million to make $1 billion. So when you take a look at 2% on 100 million, that is $2 million. And then you do that 10 times, and you got $20 million in your pocket. Can you, anybody out there, figure out what to do when you're handed $20 million for free? Just an inquisitive question, Just an inquisitive question. Someone knocks on your door at your house at 2:30 in the morning. You're like, what the hell do they want? Hi, I'm the Federal Reserve. How would you like to have $1 billion for free? Is that a trick question? It's so hard to believe it goes on every day. Isn't it amazing? This is true. It goes on every day. It's insane. The media won't talk about it. It's just like the Bloomberg story. I responded back to it, and I didn't get a response back. Like, no, did they subtract out the 120 million plowed in every month? Is that part of the calculation of recession or not recession? There's silence. Crickets. No one wants to talk about the real stuff. They just want to throw this scary word out there. Recession. All right. And last but not least, we go over to the Nasdaq 100, the Tech 100, known on Dukascopy, right there. Let's throw that up on the screen. And as you can see, they also did the fun thing for free money this morning, going into the London Open, right there. In this case, it took a little bit longer. Look at that. It took about another 30 minutes for it to make a bottom. And they made the bottom, and that is the low right there, right? Let's see, 14,586.50. Let's see, where's the low? Yep, that's the low. It took about 30 minutes later. But they convinced them to take the money. Take the money. It's for free. Yeah, but what if you want it back? Then give it back to us. Well, what if I blow it on fast cars? You will be in trouble. Buy stocks only. And so that's what you see here. We went from 14,586 to where we're trading right now of 760. So that's 180 points higher. You can see how our math picked it up right there. Sold it when it was going down, picked it up when it was going up, and selling it down when it's going down. And right there, right now, look at that. We can make that bigger. It is trying to turn it back up again. It's trying. You got a volatility signal and a volatility signal, two volatility signals right behind each other. And so it's trying. It is trying. Easy peasy money by Federal Reserve. Everybody incorporate, open up a hedge fund. Maybe they'll throw you $500,000 or $1 million or $2 million. Let's see. Let's take a look at it on an overnight basis of a day to day. There is the Tech 100 right there. You see it's up. And let's check her out here too at the same time, reflecting the same thing as J4X is right there. Down in a daily sell for a couple days here now, or a couple weeks, I'm sorry, a couple weeks here now. This is going on the third week. It's been in a daily sell since yesterday. It went down well, and now it's trying to perk up, but having its issues of getting going. The money is not that convinced that they want to be there. Look at that, a third volatility signal happening. You have to see this. 3 of them now. They don't know where to go. I don't know what to do. They gave me $1 billion and I don't know what to do with it because I don't know what to do. Buy stocks, sell calls, buy puts, take the dividend in and take the free cash, create the free synthetic. All right, so that's where we are with the stock indices. They've had a very nice rally off the lows last night, and they were pretty good lows. And so that's where we are at the moment. The stock market is lifting up, and let's see what else is going on. What else is going on? There we go. So what else we can say about this? I don't have anything more to say, and nobody's fired any questions out. So if there's no questions, what shall I talk about for the last minute here? I guess we got to come up with a title. If anybody has an opinion on a title, how about like recession and QE in the era of QE? I don't know. Or do we talk about individuals like Turkish Lira did not crash this time? We could say something like that. Or what else can we talk about? Stock market bottoms big in London Open. How about that? That sounds kind of neat, doesn't it? Kind of sounds exotic. Let's see. I'm trying to figure out what to refer to it to, but I don't know. I think we're just going to call it quits. Doc's going to sing. There's no questions today, so it's kind of quiet. And we will catch you all tomorrow, same time, same channel, on Happy to Hump Day. Happy trails to you until we meet again. We should have that little song going. Happy trails to you, to all our trading friends around the world. All right, traders, we will catch you tomorrow. Janos, feel better, and ta-ta for now.